So let me get this straight. You are working harder than you ever have. You're more in debt and you're actually unable to keep up with the Joneses. You came here for the truth, so let me unveil that for you. Something isn't adding up because you look around and you see opulence and you see the spending and you see people that are there doing seemingly everything. And then you look at your finances and you think, how the heck is this happening? Well, as will discuss today, you could see what debt has done to people. It is breaking their backs, like this guy right here on the screen. With concerns of a potential recession looming, people are ditching credit card chaos for something surprisingly old school: predictability. This is, some people, when you look at some samples, they're going to show us one view of what's happening. And then there's another. I'll give you both because I want you to have a balanced approach to data. And we're not just going to talk about what's happening, credit card debt. Okay, it's expanding, student loans. Yeah, we get that. What about taking action? What can we actually do? I'll give you some tips and pointers today. 77% of Americans have changed how they manage their money due to uncertainty, and 49% now prioritize no surprise fees. People want free shipping and they want no fees. Okay, so even if it's all baked in there, at the very least, they understand what the price will be. Corporate layoffs have ramped up in recent weeks, and you'll look at many examples, whether it's Walmart, Amazon, Microsoft, Procter and Gamble. These are some of the biggest companies in the United States, employing literally millions and millions of people. And what happens when you start laying them off? Well, you could say, you know what? No big deal. I'm not shedding a tear. These people go out into the economy and buy at the place you work at. They would be a problem for you if they didn't have as much disposable income anymore. And what if they were somehow your neighbor or maybe a family member and they know you're employed? They're going to come knocking, hey, I need some help. So we have to hope that the economy is doing better and it's not stagnating and it's not declining, because this will have its knock-on effect. And that is showing up all over the place right now. Upcharged Americans to see energy bills skyrocket with new June policy, and residents will spot a mysterious capacity charge. So you let me know if you have seen anything like this before. But essentially, they're saying about 10% increase in energy, just like all these other ridiculous fees. You go to book a flight and you're saying, hey, it's $500. And then you get to the end where you're ready to put the credit card in, it's like $1,000. It's like, how do we get from 500 to 1,000? Like, this is crazy. Fee this, fee that, fee fi fo fum. It's all there, adding up. Home values have fallen month over month in more than 60% of US counties. And when we look at this, I think it's important to understand something, and that it isn't just, a one-sided thing. You can't say, well, home prices are rising or falling or whatever. But when people rely heavily on the equity in their home, then it has a major impact on the economy as a whole. When house prices are rising, when 401k values are rising, people feel better about themselves and they start spending. When those go down, they say, oh, I'm going to protect what I have. That's the big difference. So be mindful. Even if it doesn't impact you directly, it has that domino effect. Keep that in mind. Consumers are financing their groceries. What does it say about the economy? Increased use of buy now, pay later loans may signal shifting consumer habits, but could also be a troubling sign of financial stress. Shout outs to the Finance Friday. Should we give Corey another shout out here? Looking at this, we always talk about it. It's one thing on the Friday sessions. Buy now, pay later. Look at what happened with Klarna. Klarna is this thing, hey, you pay 0% interest if you pay it back, right? So, hey, you don't need to get that Chipotle Pay it right now, pay it later. Okay, you want extra guac, get the extra guac. You can pay it later. It's 0% interest. But what's their business model? Their business model is that some people are not going to pay it back right away and they're going to make a super high interest rate. But part of their model is also the fact that they want most people to be able to pay it back. And there's kind of a delicate balance there. But what happened to Klarna is that too many people couldn't pay it. Yeah, because they were getting the guac. Okay, because they were buying Chipotle when they should have been buying the cheapest thing that they could find. When you are in dire straits, you should be eating the most basic of basic things. Get your finances in order. Get that to happen. The most basic, come on, struggle for a little bit. I know that this may not be, the healthiest options or the most variety or whatever. Get through the difficult times and then you could resort yourself out. 3 recessions in less than 2 decades, a millennial's lament. I'm still reeling from the 2007 to 2009 and 2020, and now I'm worried about to get hit again. This is what happens, okay? When you have these difficulties, and during these periods, these people are dealing with all these things. Home values, are they going up? I live over here. Oh, and they're going down. Corporate layoffs. Maybe they didn't get laid off, but maybe their family member did. Okay, on and on. You see how this has an impact. Yeah, we have guys like, Larry Fink and all these others, Jamie Dimon. They're saying, hey, we've got a problem with the deficit. We've got recession incoming. You hear that all before. It doesn't matter what they say. It matters what actually happens. And so, what do you do about it? Are we going to sit here and complain about it and say, you know what? The government needs to fix it. The government is passing these bills. Canada, US, they're all doing it. That are going to absolutely spend way more than they have ever done before. This is inflationary. Of course, it depends on where the money goes. If, let's think, okay, they're going to do $3 trillion bill. All of that 3 trillion went into, I don't know, the real estate somehow. Well, what would that do? It would go and create inflation in the real estate, but it's not like that, right? It's kind of spread out. What we do know is that the military industrial complex is going to win, and we've got other things that are happening throughout this time that are going to benefit one industry or another. We're going to see all that, broken down in the coming weeks and months. But I don't want to see you with the so-called stinking thinking, okay? I really dislike that. No matter what is in front of you, the worst obstacles possible can be conquered. But if you have that little bit of doubt inside you, it's not going to happen. It's not going to happen. That little bit of doubt will eat you from the inside. You have to be able to get through this. How do we do that? Okay, let's talk about some action items, right? Well, let me cover this first. I'm talking about resources, uranium. Okay, I'm talking about this since 2020, and I like to bring it up as frequently as possible. This uranium company wants to break the grip that foreign state corporations have on the nuclear U.S. Nuclear fuel. Looking like this. This company saying they Centrus Energy, it's an American-owned, publicly traded enricher that wants to strengthen the U.S. nuclear fuel supply chain and create competition in the market. Something like this could be a big change, right? We're seeing uranium, but it's not just about holding physical uranium. There's much more to it. China has granted temporary export license to rare earth suppliers of the top 3 U.S. automakers. This is sort of an olive branch, right? They're saying, hey, let's get the talks going. Let's make things happen. What can we do? As individuals, we need to take action. Where are we putting our money? That's the first thing. Where are our savings? Is it in the bank? Is it in, some sort of mutual fund? Are we putting in a money market? What do we want? We want to have some fixed income so that the money is coming in. And at the same time, we want to be able to hold on to some level of wealth preservation. We want real assets. We want things that are tangible. And if you're going to get into paper assets, potentially something that is there as part of a risk assets, something in the portfolio that does well for you, where you would park your money over the longer term. You have to really keep an eye on things very closely, very closely. If you are to, sort of trade, whether that's like, I'm not even talking swing trading, I'm talking about trading as, the occasional trading here and there. You can't just say, oh, well, I saw Jeff Bezos, he said something big is happening, I'm going to just invest in Amazon. No, there's much more to it than that. Okay. You as an individual, you got to understand where your money currently is, and you got to understand this delicate balance in between fixed income, wealth preservation, all of these things. I had the videos up on my YouTube channel in the playlist. I have my books, but I keep talking about it, and while I have sold thousands and thousands of copies of the books, just not enough people read it. I've got the free e-course, free, 100% free. It's called Compass. Okay, the Money GPS Compass, totally free, 20 minutes through the whole thing. You get that. All of these things create this foundation of knowledge for you. Okay, so that's fine. What else can we do? Well, you as an individual need to look at these stocks that you're getting into, and it's just people don't have a sense of, when you buy, before you click that button, whether it's anything, it's a cryptocurrency or whatever, you already have to have the idea of when you're going to sell. You may not sell it at that point, but at that moment, you've determined, okay, I bought it here, and when just before their earnings report comes out, I'm going to sell it. Now, maybe in between now and then, things change. Everything does. And you may decide to buy more. You may decide to sell, like whatever the case is. Look at gold. Look at what's happening with gold. You may have your base of gold. Okay, I have this much. And then you increase your portfolio to 25% gold. But you may decide, you know what? Risk assets are being purchased, economy's it's so strong, it's wonderful, I'm going to reduce my position. That doesn't mean you sell everything. That's not how it works. It's a balance. A portfolio is a balance of all these different things based on you. When you watch some of these YouTube channels and they're just telling you what to buy, are you that exact person? Like, you have your own circumstances. One guy has 3 kids, the other guy's 18 years old. It's a big difference. You've got to understand it, and that takes time and education. All right? I've talked about many, many things. Okay? We get into it deeply on the Finance Friday. Shout outs to all my friends on Finance Friday. If you want to know more about that, link will be at the top of the description. I have a big video coming about debt and actions that you can actually take related to debt specifically. I got to work on that this week. This was just sort of a little preview to that, so please stay tuned. If you want to support the channel, hit that thumbs up button. Literally clicking that button, throwing a comment in there, it really actually does help to boost this. I get comments every day saying either I was unsubscribed from you, or people will say something like, hey, where'd you go? I haven't seen you for many months. I do like a lot less videos today. Sometimes it's like every week, sometimes every 2 or 3 weeks. Whenever I have the opportunity to do that and I have a lot of data, I can bring out a video. But understand that there's only so much I can do, but the algorithm's probably not going to feed you the video. So you can just periodically check in and see what I've got. If you put the little bell and things, I think it still doesn't even help. But I want to thank you for being here. I'll see you on the next one. Take care.